Welcome to FOMC Day. That is right. We're live an hour and some change early because today we're going to be covering the FOMC meeting live. We're going to be hearing the numbers about what the interest rate decision is going to be here in 10 minutes. I'll spoil it for you. It's not going to be anything. But the important detail about today's FOMC meeting, it is an important one. We already watched this morning as Canada announced that officially quantitative tightening is over, or in other words, they are not raising rates anymore. This is something Jerome Powell and the American Fed has not done yet. Do we hear him echo our neighbors to the north? Is quantitative tightening over? If so, Bitcoin and crypto could be about to skyrocket, but stick around for the entire stream. We got a lot of news to go through as well. Make sure to smash that like button and hit subscribe. On our way to 50,000 subscribers, get us to that level. But first, we got to roll an intro. Welcome in, everyone, to the Investing Bros Daily Live Show. Again, starting a little early because of FOMC, but we're going to have a blast here. But first, I got to come and introduce these two gentlemen right beneath me, starting off with the Smay in blue. I should have worn a white shirt, guys. This is on me. I completely understand. Listen, we'll dock it out of my pay. Love the blue shirt, love the red shirt going on here. Smay, how you doing this afternoon?
I think that should just go to me. That fine. I'll don't worry. I'll pay the fine.
Possibly,
you know?
Yeah. Okay.
I think I'm doing great, Tim. I'm excited for another day to watch Jerome Powell tell me the things that I care the most about, and he is the greatest guy. I just have to say.
The greatest of guys for sure. Tshroom over here in red. How you doing today, my friend? You do anything special this morning?
I'm doing better than I deserve, Tim. A little bit more exhausted, maybe, than I would have expected, because you and I got a chance to get out of the office, get out of our tech crypto dungeons, and hit the links.
We did.
Not the ski boarding or snowboarding, but actually go and play some golf, and it was a lot of fun. How are you feeling? You still sore? A little tired?
I'm not sore. It's surprising how tiring it is to play golf. Now, we also hit like probably 100 balls before because they delayed the opening of the greens because of some ice and stuff. But not sore, tired. We'll see tomorrow if I'm sore for some reason. That repetitive twist motion, it really gets you going. But
in the lower
people didn't come here
specifically.
People didn't come to hear about our golf game, even though it was epic, and we'll have to tell you about it later, maybe in a members-only stream. We're going to get into some details here in the crypto space. Again, in about 7 minutes, we're going to be getting the official announcement from the Fed about what their decision was about rate hikes. Again, right now, there's almost a 99% probability we're going to stay paused here in the month of January. It's going to be the interview at 2:30 Eastern Standard Time. We're going to be covering that live. We're going to show it to you guys. What he says and how he answers questions at that meeting is going to tell a lot about what the future of crypto and the stock market prices will look like. But before we get there, we have some other stories we're going to cover probably after we get the announcement here in just a couple of minutes about what's happening with the interest rates. For more on that, I'm going to throw it to Tshroom for our 1-minute news wrap-up. Go ahead and take a look. What's happening, Tshroom?
Absolutely. Well, Tim, the Bank of Canada, they cut 25 basis points to 3% as expected, announces end of quantitative tightening for our neighbors to the north for Canada. Central Bank of Czech Republic governor will present a plan to buy as much as 7 billion Bitcoin tomorrow. And then I asked, could Trump's Bitcoin reserves get fast-tracked now? This is definitely a big headline with a big number. And Utah's Bitcoin bill HB 230, allowing state Bitcoin investments, clears committee 8-1, very popular, and moves to the House and then presumably to the Senate and to the governor's office of Utah. Doesn't stop there. $70 billion investment firm D.E. Shaw has bought a position in Bitcoin miner Riot Platforms. This is via Reuters. And finally, more on topic of what today's stream is about, the polymarket spread currently for the Fed decision in January is holding steady just a little bit below where it was yesterday, I will note, but at 98% that there will be a pause. There will be no change. This should not surprise anyone. We've known this essentially since the last decision in December. So that's the news for today, and we'll be getting into more of those details here later in the stream.
Yeah, well, real quickly, we usually start with the bubbles and go to the charts. I'm going to start on the chart, briefly go to the bubbles, go back to the charts. Let's go to my screen here. Bitcoin just eclipsed. Now, it's back down below, but a second ago while Tshroom was speaking, we just hit 103,000 again today. Saw people in the comments asking, are we pumping? Are we dumping? I really wouldn't call what we're doing right now much of a pump or a dump. Technically, we're moving to the upside. So if you have to choose one to go with, it's a pump. Look at the 5-minute chart here where we have been moving bullishly this whole afternoon. In fact, it really kind of started back here around 11 o'clock. Earlier. You also can see that we're picking up some volume. What I will say, though, is the volume's picking up. The candles aren't necessarily getting bigger, so there's a little bit of a moving back and forth. We're getting into positions where maybe the bears hadn't been selling very heavily down here around 102.3, 102.4, but as we're approaching that $103,000 mark, it looks like the bears are kind of picking up and selling off a little bit here. Why? Well, this is FOMC day. The only thing you know about FOMC Day for sure is that the charts can be chaotic and they can be volatile and they don't always tell the truth. And I don't want to FUD anybody out here. What I'm about to say is not supposed to be FUD, but I just want the record to note here, what we do before the decision means very little about what the actual outcome is going to be. Not every single time, but many times you actually usually see a pump. Let me take away the word usually. A lot of times we have seen a pump before something happens that ends up seeing the market correct. Other times we've seen a correction into the decision and all of a sudden something changes and everything moves to the upside. What you need to understand, if you're new to the world of investing, if you're new to the world of trading, especially on the Bitcoin and crypto charts, and you're looking at the FOMC day right now asking, how should you look at it? What I can tell you is for probably the next 24 hours, you're not going to 100% understand what the next big move is going to be. We're not 100% certain, will this FOMC meeting lead to a massive break to the upside? Or potentially, we've discussed here on the show, if we start to move to the downside, would this be a pretty big move to the downside? Maybe hitting levels like 96 or even 92 could be on the table still. We're going to have to wait and see not just what happens in the meeting today, but what happens for the next 24 hours, like I said. But let's check in on those bubbles real quickly, and then we'll move back over the charts. A couple big gainers here, like XCN is out here behind my face, 35% today. Guess another coin over here. Again, I can't believe we have to say this, but it is a top 100 coin. Fart coin up 11%. WIF is up. JTO, ONDO, Uni, they're up. There are some red ones, though. DEXA is the big red one here today. XDC is down 10%. Render's down. Jupe is down. Flare is down. But nothing necessarily too crazy. And I said all this because Bitcoin is, as you saw on the charts, it's up right now. Let's go back over here to like the 1-hour chart. We're pumping here today on Bitcoin, and there's another chart pumping right now that is showing that the alts are being a little stagnant, not doing a lot, and Bitcoin's moving to the upside. It's the Bitcoin dominance chart, Bitcoin.D, BTC.D. We are not back above 60%, but we are at 59.61. This is a move coming to the upside. Now, I did see some people kind of showing this earlier. We're going to see how we get a rejection. You can't count anything out until there's a rejection here. But with a rising level of support, a pretty steep rising level of support, if you come back here, let's say we do top out somewhere in the world of 60%, maybe go a little higher, be prepared for a potential move, something like a rising wedge pattern that could end up being a downward facing breakout for Bitcoin dominance. But as a whole right here, we don't know what's happening other than Bitcoin's rallying. Altcoins are rallying. I know my face is blocking. Take my face away for a second, Smay, so that people just can see this far right side. Pretty much everything in the crypto space, you see green numbers over here. That means since the daily candle opened last night at like 7 p.m. Eastern Standard Time, pretty much everything in crypto, except for Caspa, is in the green right now that I'm watching, our big watchers right now. So you can put me back on screen, though, so people can see me. Long story short, what this means is that it's a bullish day as we were low. We had these pullbacks, obviously, as you're looking here, the last couple of weeks, going back to Bitcoin, we had been falling. If this will load for me, there we go. Welcome to Georgia Internet. All right. There we go. We had been pulling back here from, we're a week or a little more than a week removed from all-time highs. It makes sense that in the volatile movement, after severe downward movements the last 2 days, we're pumping into the news, but it hasn't been decided what's going to happen. Speaking of, though, we did just get the report as we projected, as we said it would. No gain. Well, that says 4.5% right there. Why? Because last month we were at 4.5% interest rates. No change happened. This was the expectation. This was what was going to happen. No one is disillusioned that this number came out. Let's go back and check the charts real quickly before we get into other news, though, because we did see on that news announcement a slight sell-off, right? We told you a second ago we were hovering at 103,000. We're now back down to 102.5. Does this concern me whatsoever? Is this something to read into? No. Why? Because I just told you a couple of minutes ago, the only thing you can know for certain about FOMC Day is that volatility is going to be here. We're going to pump, and then as soon as you feel like, oh, here we go, we're breaking new highs, all of a sudden candles are going to start coming back. You're going to hear good things and bearish candles are going to form. You're going to hear bad things and bullish candles are going to form. This is called FOMC chaos. Please, if you're new to trading, be very careful with how you trade this information. We will, here in half an hour, be hearing from Jerome Powell himself. That's going to be the much bigger deal about what affects cryptocurrency and the stock market in general. But even when that's all said and done, stick around afterwards. That will help you break it down. We'll help take it in bite-sized pieces so that you can understand the nuances of what was discussed and what the future looks like and what that means for all of your holdings. But we're going to take a break. We're going to take a break from the Bitcoin charts. We'll take a look at altcoin charts possibly a little later. I mean, we got a half hour until we hear from Jerome Powell, but we have some big stories that aren't necessarily just the FOMC that do have impacts on crypto prices. And for that, I'm going to send it over to Tshroom to get into our news for the day. Tshroom, what do you got for us?
Absolutely. Well, the most exciting one here, Tim, is actually Zero Hedge bringing to our attention that this man here, I don't know his name. His name's not listed here, but it is kind of floating around. He said, "I like profitability." This is Czech central bank boss. He wants to buy billions in Bitcoin for reserves. So Czech is a country, not a country that people hear much about very, very often. But they could be making a splash here. Now, what I'll say is what this elected official really wants at this point in time is just a plan to be passed. It's kind of like it kind of reminds me a little bit of the episode with Apple doing a report. That was being done, or it was Microsoft doing a report on whether to buy Bitcoin. So it's not actually a vote to buy Bitcoin; it's a vote to do a report. So that's essentially what's going on here. However, this could potentially go ahead and put a little bit more pressure on the U.S. and other countries to move forward on a Bitcoin strategic reserve. So that's a big one. Again, we also heard, moving along in the news here, we also heard this morning from the Bank of Canada, which cut rates. So the FOMC, the news we just got, that they paused rates. They didn't hike them, they didn't cut them, but Canada did cut rates, and their federal funds rate is now 3%, as expected. And this kind of also came with a presser announcing the end to quantitative tightening in the nation to the north of America. We talked about this one here. This was the name of the gentleman, the governor is Ales Michel, and he's pushing for 5% Bitcoin allocation. If approved, it would surpass the Czech National Bank's current gold holdings of 4.3 billion euros. So very, very interesting times in Eastern Europe as they're trying to mull over profitability in their central bank holdings. Meanwhile, Utah Bitcoin bill HB 231, allowing state Bitcoin investments, clears the committee 8-1 and moves to the House. This is just today. We're getting almost every single day a new headline of a different U.S. state, whether it be Texas, Arizona was yesterday, Florida, Pennsylvania, New Jersey, and also plenty of cities and specific pension funds. But they're all pushing bills right now towards making a Bitcoin strategic reserve. It's very, very exciting, and it's all coming at a time when countries around the world, sovereign wealth funds, corporations are actually buying Bitcoin. More and more corporations every single day. Metaplanet, MicroStrategies might be companies that you've heard that are publicly traded in the US and Japan that have a very aggressive Bitcoin buying policy. Well, it's also states and university endowments and city pension funds and police officer pension funds that are considering buying Bitcoin. Some of them have already done it. And others are, like in the case of Utah today, just clearing a subcommittee to take the vote to the House. But the subcommittee is 8-1. That's pretty unanimous. And moving along here to our final story here, Tim. A $70 billion investment firm, D.E. Shaw, has bought a position in Bitcoin miner Riot Platform. So not directly buying Bitcoin, right, but buying a company that has a lot of the share price is almost a 1-to-1 exposure to the Bitcoin price. So, Tim, with all this bullishness here, it's great. It's a great time to be in Bitcoin. But for folks who are just entering the space, maybe just getting started with investing in general, is it still a good time to buy Bitcoin?
Yeah, so the news that we're hearing right now, as you hear other foreign governments wanting to buy and add Bitcoin to their balance sheet, as you're hearing states within the United States and then small entities. Of course, we had Arizona the other day sign that they're going to have a Bitcoin reserve. These are great long-term bullish stories. I don't know if they have this massive kick that sparks off the markets to go to new heights right this second, but these are like, this is like building a fire, and if you just start a fire with a bunch of large logs, it's going to be really hard to get that fire going, right? But once the fire is going, you want those logs in place so that you actually have a sustained bonfire and you get warm and the fire is effective. But you got to have the kindling, right? The news that Tshroom just covered here, these are all like logs on the fire. The long-term bullish adoption and having large entities wanting to buy up a lot of Bitcoin, that is going to help us down the road. And once the fire gets lit again, we're going to be good. None of that was kindling. None of that is sparking us right now. In fact, we talked about this just a couple minutes ago. We're 7 minutes into the hourly chart. Go back to my chart here, Smay. I told you guys at the top of the hour at 2 o'clock, don't be surprised to see some sort of sell-off. What has happened while Tshroom was speaking in 7 minutes? In 7 minutes, Bitcoin took away all of the gains of the last 2 hours. Take a look at like the 5-minute chart. Again, so many 2 hours of bullish momentum all wiped out with one 5-minute candle right there. What does this tell me, though? This just tells me this is volatile. We don't know exactly how we want to respond to this upcoming news. On the other hand, though, this is kind of zoomed in here, right? If I were to go to the 5-minute chart and zoom in, you could get really scary looking. You could just be like, all right, we're Bitcoin's over. Bitcoin's dead. Let's go out to a longer time frame and get perspective here. The daily candle still white, still bullish as a whole. You zoom out and you kind of look at these perspectives, still very, very bullish. In fact, right now, amongst all this volatility, there's 2 support levels I would really be keeping on just from a trend perspective. I'd be very surprised. Gotta go back to the 1 hour chart here. Very surprised if we lose this green line right here. 1014 could be very, very interesting to watch. Now, there are smart trails down below, and we'll take a look at some different levels. While the Fed meeting is live, we'll watch some support levels that could be very interesting. There's no sell signal necessarily here. Well, I say that. Let's zoom in here. Did we get this sell signal? That was a sell signal right there. Little bounce back up, but red reversal, bearish momentum, negative money flow. So I scratched what I said. I'm going to take back. I lied to you guys, and I apologize. Green line right here. I'm not going to say let's rule that out yet, but actually, we very well could lose that in all this volatility. We could come down to the 1 hour chart. I want to see what is the highest sell signal we are getting. They're not going to have the 4 hour. That's not going to be there. We know nothing higher sitting the sell signal. 2 hour, no. So that 1 hour really is the highest level buy sell signal right now. So what I would say is our target right now during this chaos and volatility is the lowest possible I could see us coming back down to is right around that $100,000 mark. You zoom out, though, and again, if we really start to drop, 96 is going to be a major level of support. We did this technical analysis the other day. You zoom out a little bit more. This is even a pretty significant Fibonacci level going back to the lows we had in January 13th to the recent all-time highs. Golden pocket, guess what's coming in? $96,000. So, yeah, that's going to be very close to that right there. But 100,000, $100,000, watch out for $100,000. That gets lost. 96,000. That would probably, though, still keep us within this newer developed falling wedge pattern, right? We were in a falling channel. We broke out of it. Now we're using that same resistance level as support. You can see here several touches. First, it's resistance, resistance, resistance. Now we have turned it into support twice. And another move to 96,000, boom. That would be a third support touch of that level. So keep an eye on that, even if things start to go to the downside. I'll tell you this, though. If you're sitting here saying, oh, did Tim just say we're shooting straight down to 100,000 or 96,000? No, that is not what I said whatsoever. Remember, I said the only thing guaranteed in this environment right now, as we're covering the FOMC, is absolute chaos. Do not be surprised whatsoever to see a bounce, come back up, down, and then we decide, do we want to go lower, do we want to go higher? That's what we don't know right now. We don't know what that low end potential is. I will say on the 4-hour chart is going to probably give us our high end potential for this chaos, and that's going to come in the form of our smart trail right here. Low end around 104,000, high end if we really start pumping 105. So you're kind of looking at the range here. I would be very surprised. This one I will say, very surprised if anywhere in the next 24 hours, we go outside of this box. All right. After 24 hours, all right, let's find out what happens. But we have our high end, we have our low end. This is going to be a range. Realistically, I actually put this box somewhere more like here. That's going to be what I anticipate for the next 24 hours for price action to be. Unless Jerome Powell comes out and says, hey guys, guess what? No more tightening. We officially are telling you we're never going to, or at least for the foreseeable future, we're not raising rates whatsoever. Quantitative tightening is over. We didn't cut rates this time, but next month we're cutting rates. If he comes out like that, and it also says Donald Trump is the number one president, in my opinion, if he said those types of things, yeah, maybe that's the kindling, the fire that sends us to brand new all-time highs very quickly. I doubt that's going to happen. I know a lot of people are asking that question right now. First of all, I heavily doubt he's going to say anything positive about Trump. He does not seem to be friends with Trump whatsoever. The question mark's going to be, does he talk about quantitative tightening being over? And while I'm assuming he will be asked, I give it a very low probability chance that he is not asked by one of the reporters, did you see what Canada did ending quantitative tightening? Are you going to follow suit? He's going to be asked. Now, how he's going to respond to that question, if I had to take a guess, very political, we're not ready to make any decisions at this time. And he kind of leaves it open and says, hey, I'm not saying we're going to raise rates, but I'm not taking that off the table just yet because inflation's not at 2%. If I'm going to bet on what his response would be to that question, that would be what I think. But I would love to be wrong. I would love for him to say, actually, glad you asked. Yes, quantitative tightening, it's done. We're going nothing but to the downside. That would be very, very bullish. But let's take a look at some. Oh, go ahead. Sorry.
Yeah, I was just gonna come in. There's been a press briefing update. So this is the precursor. This is a statement to the press briefing. And every time we get a decision from the FOMC, these red lines, these are the edits that have been made to the official statement that signals the rate decision. Zero Hedge here points out that the most notable change in FOMC dropping references to inflation making progress towards the committee's 2% objective. Of course, this is going to send some speculation that we saw earlier or in late last year, late 2024, that the Fed could either de facto or explicitly come out and say that 2% is no longer the inflation target for the Fed. Of course, that would be pretty extreme. That would be a breaking of a very long precedent. I believe the Fed's always had that 2% objective. But this statement goes further. Do we want to jump back to what you were going to cut to, or do we want to read some of the amendments?
Yeah, I mean, you brought it up. No, this is good. This is kind of what I was talking about, because what I'm doing next, we're in transition into looking some other coins, some other charts. I saw people asking about Ethereum and asking about ONDO and asking about some others. We'll take the next 10 minutes and look at some charts and then kind of regroup, prepare ourselves for Jerome Powell. But yeah, finish this up and then we'll get back into the charts.
Absolutely. I mean, so labor is the other mandate that the FOMC is tasked with regulating and normalizing, right? So that's the labor market. And that's referenced here in the first paragraph. So removed was, since earlier in the year, labor market conditions have generally eased and the unemployment rate was moved up but remains low. That was replaced with that was replaced with the unemployment rate has stabilized at a low level in recent months, and labor market conditions remain solid. So I would say that is a bit more optimistic. I would say that's a bit more optimistic. Inflation has made progress towards the committee's 2% objective. That's what Zero Hedge pointed out had been removed. So they removed that part, and the statement now is revised to inflation remains somewhat elevated. So, I would say that's neither dovish nor hawkish. I'd say that is potentially setting the groundwork towards a revision overall of what their inflation percentage target is. However, it's going to take a lot for them to officially say they've changed their target. I think more than anything, they're just trying to take attention away from that 2% target in anticipation. And this might be this will be asked. There definitely will be journalist questions about this. It'll be interesting to see how he answers those questions. If he says it will remain 2%, but we will, have to put that mandate to the side in order to, stimulate the economy or whatever they're going to do, whatever they would comply with the leadership who just got a mandate from the elected officials. So we'll see how that goes. But yeah, those are the main changes. More down here, but this is mostly just references and who voted and things like that, which we won't get into today.
Yeah, not a big deal. We'll have to watch the meeting. There's gonna be a lot of things there. I think another one's gonna be interesting. Trump this week talked about tariffs once again. Talked about federal income tax going away. He mentioned stuff about American-based crypto again. Maybe removing the taxes on American-based crypto. There's a lot of things. I wonder if the tariffs get brought up again, because he mentioned that last time, how he was afraid of what Trump policies would do to inflation. And he wasn't necessarily 100% wrong, but if he gets there, we'll break that down afterwards. I'm going to keep that topic for another day. Really quickly, we're going to jump into altcoin TA. I see some coins people want to look at. I want to mention, though, 1,400 people here in YouTube. Smash that like button. We need to get over 700 likes here while we're live. Only 227. I want to give a shout out to everyone on X, though. We have 1,200 people watching right now on the X platform. Thank you so much for watching. Smash the like there as well. Make sure you're following me over on X. And if you want to be a part of the community and get your chat read and be a part of it, jump on over here into YouTube. We are over here live as well. But let's go ahead and take a look at some of the coins people are asking for. I'm going to start with coin number 2, and that is Ethereum. What is Ethereum doing right now? Because someone said this is going to have the largest impact, and they're right. It has the largest impact on Bitcoin dominance chart. If Ethereum can start to take dominance away from Bitcoin, that would be amazing. But how is Ethereum actually looking right now? Before I look at that, I want to just do some basic analysis here. We're in a falling wedge pattern here. Unlike Bitcoin, I mean, we've been in the same falling wedge pattern, the same duration as Bitcoin, but Bitcoin broke to the upside. Ethereum has just stayed in. This is a good thing, though. This is still a very bullish formation that more often than not ends up leading to the upside. A casual estimate here is when we break. Not quite sure when that's going to happen, but when we break, let's pretend maybe soon, this would send us back up to those highs we just had, around $4,100. So people would love to see Ethereum back over $4,000. But let's kind of dive in and see what support and resistance looking like. What are the oscillators kind of telling us right now? I'm going to kind of stay here on the 4 hour. I don't really feel a need to go too much other places, save some time for other coins. That money flow is just staying nice and boring. It upticks, it downticks, but staying right there in that boring spot. No buy or sell signal right here. We've had recent reversals on both sides. We've had recent momentum. This chart is just waiting for something bigger to happen. It has no reason to take a massive move to the upside or a massive move to the downside in terms of the oscillator action. So boring right there. When it comes into support and resistance levels that I think are intriguing to keep an eye on, to the downside, we're about to hit a sell signals take profit levels, somewhere here between 3,000 and 2,800. I guess I do have to look at another time frame to see some other things, although I bet you with liquidations we could kind of pinpoint some interesting spots. Yeah, interesting liquidations down here towards 2,900. So, 2,900 right there. I would say, again, based off of the fact that you have a take profit, you have liquidations in this area, it's down here closer towards support. $2,800, $2,900 is going to be an interesting spot if the bears start to make a push on Ethereum. It would be very simple, very easy to come down to that level. To find some further confluence, let's back up just a little bit outside of here. Where you're going to want to take a look at a couple different things. Let's go to a more macro perspective of Fibonacci retracement here. We'll go back to the lows of November compared to the highs. Golden pocket, guess where it's sitting? 2,900 right there. So that's going to be a nice support floor. If the bears get a rolling, I would imagine there's going to be a good amount of buying that happens around 2,900 on Ethereum. Vice versa, though, to the upside, I think it's going to be pretty easy just to kind of put this spot right here. Look out in this area where the smart trail is, zooming back in, somewhere around this 3,300. The smart trail's there. I think when that Fibonacci level had a line right here, the red resistance levels right in this camp as well. So even if we get to pumping back to the upside, 33, maybe up here to 33.26, but 3,300 on Ethereum. To me, I think there'd be some selling off that happens. Again, unless there's some massive story, massive reason that the market start a pumping. You can see, though, just like Bitcoin, it is dropping here. It didn't have the same pump today earlier that Bitcoin had, but it is falling right alongside Bitcoin. And again, floor here, 2,900, a very interesting support level for Ethereum. I saw someone ask about ONDO here. ONDO had spiked back up almost to $1.50 yesterday and today. In fact, a couple days ago, it was over $1.50. It's not necessarily having the same crazy pullback that Bitcoin is having. The last hour is pulling back here a little, has some nice support that it's about to bounce off of here around 137. But I want to kind of look at the 4-hour chart as our levels of support and resistance to watch. Let's start off oscillator-wise. We had a buy signal here, but did we reject? Yeah. Buy signal came in, and we came right up to the smart trail on that 4-hour chart. That just shows you the beauty of how great Luxago is with their trade signals. When you get these buy signals coming in, the target should always be that smart trail. If we break above, the target should probably be somewhere here around $1.57. We have an order block and the red reversal cloud up here on ONDO at 157, 158. So that would be my kind of ceiling here. I started ceiling rather than going floor. To the downside, a pretty significant support level here on 126, but I want to take a look at liquidations as well, where it's a little messier, right? A good amount of liquidations down below us. There's a pocket at 130, a pocket at 124, then another pocket, which this looks like the most significant level, 120. That could be your downward movement right there. If I were to throw Fibonacci in here as well for a significant Fibonacci move, let's take a look here. Golden pocket, 124. What was liquidation said? Oh, I said these are down here. So platinum pocket, right? The platinum pocket's coming right in there with that thick level of liquidations at 118. So two levels, keep an eye on down below. Golden pocket around 124, platinum pocket at 118, 117, give or take, to the downside if things start to get ugly. That's where I would have my attention on ONDO for buying back up. What time we got? We got 2:23. We have a couple more minutes here. I saw this one. Oh, we got a link. We did not do link yesterday. I'm going to take a look at render in a couple seconds. I saw some people begging for render TA. Other people saying, please don't look at it. I don't want to cry again. Yeah, we told you the other day when that AI stuff started happening, render could have a little bit of a downward trajectory going on. Let's look here on the 4-hour chart. What's going on with the oscillators? We'll kind of move through this in a similar fashion. Messy money flow. Not going to give this a buy signal, even though we had a green reversal and bullish momentum right there. Couldn't get that money flow to commit to being positive. Above us is that smart trail up here. So if we do get some sort of buy signal in the short term, 2440 is going to be an area to keep an eye on there. If that gets broken, then you're going to be looking up here towards 2750, give or take, to the upside for your next rejection point. If we're going to be looking to the downside for support, couple different things I'm going to be watching. Take profit on a sell signal and a major breaker block coming in around $20.64. Let's turn these off and start to find if we can see some confluence in here. Liquidations, a lot of pocket liquidations here on 22, but then there's another pocket, guess where? Around $20. So the evidence is stacking up on that end around $20. Last one, though, Fibonacci. Let's go to this low, recent high. Where's that golden pocket coming in? Guess what? $20. So that's going to be my spot right there that I really like. If we start to move to the downside, start to accelerate, you're going to want to move towards that golden pocket. Now, before I do render TA, I want to make sure I'm clear here, though, with everybody as you do technical analysis, I am not telling people just automatically to long with heavy leverage positions in this golden pocket. If you want to buy the dip in the golden pocket for long-term holds, be my guest. What I'm saying is if you're a trader, we're going to look for this as a possible support level that we want to then go and look at the oscillators. We want to take a look at the volume. We want to see, is there a massive reason that the flipping of buying should be coming in as we hit a major support level? Or will that continue the downside and we're talking platinum pocket or lower, right? So that's what we're kind of watching there. Let's look at render real quickly, and then we'll get regrouped into our discussion. We're ready for our Jerome Powell. We just lost a major support level here. We had been tracking a falling channel of types, and we lost that support level. Render continues to fall here dramatically. Now, let's kind of look at on a 4-hour chart what's going on here. We are sitting on some pretty strong support even right now. We've dropped to some pretty severe levels. There's a part of me that's almost like render needs to pop back up just because it's so discounted. You had bullish divergence here. The money flow is not cleanly going to the upside, but it's definitely flowing more in the right direction. We had the green reversal, bullish momentum. I think we're close here. I think we're close to a reversal. Let's look at liquidations here. Yeah, there's really nothing left below us on any recent liquidations whatsoever. So there's no excuse or reason for a whale or an institution to continue to manipulate price to the downside. And I think the last thing we'll take a look at, again, Fibonacci levels. Let's back up all the way over here. I can already see this. We're below the golden pocket. We're probably getting close to platinum pocket levels. Yeah. Let me go higher because we got to get right there at the top. Yeah, we're about to hit that platinum pocket. That's not a good thing. That shows a weakness on the side of render. But if we're able to bounce there, 519, look for reasons potentially to look for a long at that 523 space. As again, we're overextended. There's no more reason to push this price any lower, and we're sitting on some long-term supports. I'm not projecting to bounce way up and hit brand new highs. I'm just saying dead cat bounce at worst, more than likely coming here for render on that level. So you can go off my screen here. It's 2:27. We got about 3 minutes. 3 minutes until Jerome Powell takes the stage. Ben just said when FOMC, it happens in 3 minutes, everybody. So make sure over on X, you're smashing a like. Over on YouTube, you're smashing the like. Tshroom, closing thoughts here. Wrapping this up. Projections for what Jerome Powell says here in a couple of minutes. What are you expecting?
Yeah, I mean, I think the big one is going to be this 2% inflation target, right? I really do. I think other things that are important are going to be, his view on the incoming president and the policies that have been made. Traditionally he doesn't comment on those, but occasionally we do get a rare gem of Jerome Powell sharing his opinion and perhaps providing some insight into the board's opinion, the FOMC board's opinion on the executive branch or the legislative branch's moves. Jerome Powell's explicitly said in a CBS interview that he thinks that the United States fiscal policy is on an unsustainable path, right? So he's gone that far to say that. Mm-hmm. And, he may share some insights into his own thinking about the incoming Trump administration and the tariffs specifically would be under consideration, but also, no income tax proposal policy. So questions on those types of things are going to be really interesting to kind of see the shots fired from Trump and towards Trump, from Jerome Powell, obviously not literally, just rhetorically. Those will be interesting. But I do think that the most important market moving consideration is going to be that is 2% really the target for the Fed to keep inflation at? Is it that, or is it not? And any kind of flinching, any kind of hesitating, or just an explicit, well thought out answer to that question could potentially send markets higher. I do think that would be bullish, right? If he keeps a tight lip about it, doesn't necessarily mean it's bearish, but if he signals to the risk asset markets that they may be willing to leave that 2% target behind altogether, or temporarily kind of pause their attention towards that, then what does that do? That allows them to then rationalize lowering rates, allowing inflation to come up a little bit more, and that's going to be good. That increases the velocity of money. It expands the rate that money flows through the economy, and that is going to be generally bullish for Microsoft, Apple, Boeing, ExxonMobil, Bitcoin, Ethereum, ONDO, you name it. Any risk asset is going to
Yeah.
benefit from lower rates.
Very good. Yeah, my thoughts here as we wrap it up. We're going to come back after. Again, we will be still talking and breaking down live after. The 3 points I want to hear him talk about and reference: quantitative tightening. Is it over? Can he promise it's over, or is he going to hold off and say we're not sure yet? Trump tariffs. What is his thoughts about moving forward with Trump tariffs? How does that affect inflation and the Fed's pattern? And also, I agree with you, Tshroom, 2% inflation. Is that still the target? Are we adjusting that? These are going to be 3 big things to watch here in just a couple of seconds. It is 2:30. You guys are just joining us. They did pause rates for January as expected, but the big deal is the Jerome Powell live speaking. Smay, does it look like we're anywhere close to this? Let's maybe test that music, make sure it works this time for when he comes out on stage. But is he out there yet? No, we're still waiting on him.
He is not out there, but if you
he'll be coming out in a second or two. Just leave that.
Hear
leave
people
that shot up.
shifting in their chair. You can hear that.
Yeah. Let's take a look back here. We hadn't looked at Bitcoin here in a couple of minutes. Oh, there we go. All right. Well, we'll keep this up while we're talking, but we're going to mute. We're going to listen to Jerome Powell.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall, and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer-run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer-run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
He didn't say anything there.
Chairman Steve Leisman from CNBC. Mr. Chairman, at a event in Davos, or to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a 3-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if any, does a president making these kind of remarks have on policy? Thank you.
3 questions. I'm seeing it really as 1 question, though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated this demand to you?
I've had no contact.
Thank you.
Thanks.
Nick.
I thought he said he did talk to him and he's not going to share it.
Nick Timmeros, The Wall Street Journal. Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we really look at movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another 1/4 point?
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal, and that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance, and I'd say you look at the last couple of inflation readings and you see we don't overreact to two good readings or two bad readings, but nonetheless the last couple of readings have suggested more positive readings. So I think policy is well positioned.
Colby from the New York Times.
Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No. So let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market. And we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret two good or two bad readings, but this was not meant to send a signal. Other than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer end, where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, actually are not really beginning to see much, and I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand, and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder, and meaning plausible, could be, but honestly, you wouldn't stand behind it because you just don't know. And so you're just on hold waiting to see what comes down. It's a very large economy, and policy is affected at the margin, but we're going to wait and see.
If I can follow up, the idea that you feel the economy, that policy is restrictive suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you you should hold?
We're looking, it's more the other, the way it works is we are looking at the data to guide us in what we should do. And, that's what we do. And right now, we feel like we're in a very good place. Policy's well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy, and so we feel like we don't need to be in a hurry to make any adjustments.
Howard.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
Oh my
So
gosh.
let me say yes in answer to your first question. But to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available. And as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that, I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law, right?
Dumb question.
Which is governing.
Dude, why?
Elizabeth.
Why?
Thanks so much. Elizabeth Schulze with ABC News. Just to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
As I've said countless times over the years, this is who we are. This is what we do. We study the data. We analyze how it will affect the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You've said that the Fed is in wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see there are alternative simulations. So that's what they do. There'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark the policymakers to sort of think and understand about the uncertainties that surround this. So yes, the staff does that, and we're all well aware that that the range of possibilities is always broad, and not just now, but always. And it's hard to be open to just how how broad the possibilities are for an economy. You know, no one saw the pandemic coming, and it was, you know, it changed everything. So things happen, and but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case. But you don't act until you see much more than we see now.
Katerina Saraiva, Bloomberg News. You know, last month you talked about a future rate cut as being pretty, you know, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. You know, we want to see, you know, further progress on inflation. And, you know, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation, because that takes out the seasonality issues that may exist. And, you know, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and you know, housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you will know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, that then we seem to be set up for further progress. But being seen to set up for it is one thing, having it is another. So we're going to want to see further progress on inflation. Remember, we're not, you know, we're under 2%, but our goal is 2%, and we do mean to get back sustainably to 2%.
And in terms of the labor market, I mean, how is that broadly, you know, you said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, you know, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. So it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing, the ratio of vacancies to unemployed. We look at all those things, and you put your finger, though, on it's a low hiring environment. So if you have a job, it's all good. But if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But yeah, I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
Edward.
Thank you. Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise." Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?
You know, so what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. And so, but job creation has come down a bit too. So, you know, if those 2 things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make make jobs for workers declines as well. So that seems to be something about what's happening. You do see a very flat unemployment rate at a time when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
You know, we run a very careful budget process. We're fully aware that you know we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
Chris Rugaber at Associated Press. President Trump has said he will lower inflation by reducing gas and energy costs. Do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
Chris, I'm not going to react or discuss anything that any elected politician might say. So I'll give you a mulligan.
Okay, thank you. Well, nearly 2 weeks ago, the Fed said it was withdrawing from the network for greening the financial system, even as we have significant wildfires in Los Angeles doing billions of dollars in damage. And of course, the NGFS, as you know, is a group to talk about how the financial system could address climate change. Many commentators did see the timing as political. Why did you leave that organization? Can you explain that decision?
Sure, I'd be glad to. So we considered this, really at length, and we did decide to withdraw from the NGFS. And really the reason is that the work that the NGFS does has broadened very significantly. You think about nature-related risks and biodiversity and things like that. In addition, the work of the NGFS is in significant part intended to, and this is a quote, mobilize mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times, and I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, this process dates back, thinking about it dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our mandate. Other central banks have different mandates and belong to the NGFS. We have no criticism of them, but it just isn't. It's not right for the Fed.
Andrew.
Thanks. Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Well, 2% inflation down to 2% sustainably is what we're trying to achieve. We're somewhat above that, as you know, and we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course, as I like to say, that you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Victoria.
Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed, sometimes never, or do you just often voluntarily comply? What is the legality there?
So it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get any deeper into this set of issues today.
Claire. Claire Jones from the Financial Times. 2 questions, if I may, on tariffs. Well, first of all, we've seen global trade wars before, notably in 2019, last time around, but then we were in a very different place on both inflation and growth. If we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around? And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move? Thank you.
Sorry.
What sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you're actually willing to change the path of monetary policy on the basis of it?
Yeah, so first of all, things are a little different now. We've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but we also hear a lot from companies these days that consumers have really had it with price increases, and so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, the trade, the kind of footprint of trade has changed a lot as trade is now spread around. It's not as concentrated in China as it was. There's a lot more manufacturing. It moved to Mexico and other places. So there are differences, and I just think the range of possibilities is very, very wide. We just don't know, and I don't want to start speculating, as tempting as it is, because we really don't know. And we didn't know, by the way, in 2018. We didn't really know. And, the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much, what countries. We don't know about retaliation. We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. There are lots of places where that price increase from the tariff can show up between the manufacturer and the consumer. Just so many variables. So we're just going to have to wait and see. And the best we can do is what we've done, which is study up on this and look at historical experience, read the literature, and think about the factors that might matter. And then we'll just have to see how it goes.
Courtney. Thank you. Courtney Brown from Axios. 2 unrelated questions. The first is whether or not there was any discussion about QT in the timeline for ending QT at this meeting. And then the second question is just, I wonder if the AI-prompted sell-off in the stock market this week signaled anything to you about the state of financial conditions?
So, let's talk about runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample. I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that rates do appear to be abundant. As always, we stand ready to take appropriate action to support that smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments. On AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although, of course, we're all watching it with interest.
Simon.
Simon Rabinovich with The Economist. Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized. At the same time, since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point back above 7%. I'm wondering, kind of looking forward, are you confident that activity will remain stable given how elevated mortgage rates are? How does it fit into your broader thinking about the economy?
So, as you know, as we've reduced our policy rate 100 basis points, longer rates have gone up, not because of expectations, not principally because of expectations about our policy or about inflation. It's more a term premium story. So, and it's long rates that matter for housing. So, I don't think I think these higher rates are going to they're probably hold back housing activity to some extent if they're persistent. We'll have to see how long they persist. So, we control an overnight rate. Generally, it propagates through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer rates have moved up.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that. We've never said we need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think our as I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so I would think we need to see further progress. I wouldn't say all the way back down to 2% on a sustainable basis, although we'd love to see that, of course, and we will.
And a separate question for
that was
you
big.
On tariffs. Curious whether the threat of tariffs and not knowing whether they could stick or not creates uncertainty for business here in the United States and could cause them to pull back, ultimately weighing on growth. Does the threat of tariffs cause you to ponder your growth forecast?
I want to avoid commenting even indirectly on the conduct of tariffs. It's not our job, and it's not our job to comment on the moves that people make. So I wouldn't want to criticize anything that's happening or really comment on it one way or another, praise it for that matter. It's just not our job. I do think that, we found in 2018 there was a lot of work done on trade policy uncertainty. Trade policy uncertainty, if it's large and persistent, can start to matter for businesses making investment decisions and things like that. That's not something I'm observing today. It's very early days for this, but I think that did matter in 2018-19, and it's one of many things we'll be watching.
Matt.
Thank you, Chair Powell. Matt Egan from CNN. Following up on Courtney's question from earlier about the stock market, how concerned are you, if at all, about potential asset bubble brewing in financial markets? How do relatively high market valuations factor into considerations about potentially lowering interest rates further? Is that something that's in the back of your mind?
So we look at, from a financial stability perspective at asset prices generally, along with things like leverage in the household sector, leverage in the banking system, funding risk for banks and things like that. But it's just one of the four things asset prices are. And yeah, I'd say they're elevated by many metrics right now. A good part of that, of course, is this thing around tech and AI. But we look at that. But we look at how resilient the households and businesses and the financial sector are to those things. So we look at that mainly from a financial stability perspective, and we think that there's a lot of resilience out there. Banks have high capital, and households are actually overall, not all households, but in the aggregate, households are in pretty good shape financially these days. So that's how we think about that. We look at overall financial conditions, and you can't just take you can't just take equity prices. You've got to look at rates too, and that that represents a tightening in conditions with higher rates. So overall, financial conditions are probably still somewhat accommodative, but it's a mixed bag.
Richard. Hi, Chair Powell. I'm Richard Escobedo with CBS News. One question for you. This month's statement notes that unemployment is stabilized at a low rate and that the labor market is solid. You walked through some of what's driving this, but I wonder what risks you see that might challenge your assessment.
Well, the things we discussed earlier, one is that there's a low hiring rate. And so that if there were to be a spike in layoffs, if companies were to start to reduce headcount, you would see unemployment go up pretty quickly because the hiring rate is quite low. So that's one thing we look at. I think it's worth pointing out that for lower income households, they're under significant pressure. And in the aggregate, the numbers are good, but we know that people at the lower end of the income spectrum are struggling with costs. And really, it's high inflation for the basics of life. It's not so much the inflation now, it's the price level. Because inflation has raised prices. Inflation is now much closer to target, but people are really feeling that. But, overall, this is a good labor market. You're at 4.1% unemployment. That's just a really good level, and you've been solidly there now for 6-7 months. And job creation is pretty close to a level that will hold the unemployment rate there, given that there'll be much slower population growth.
One more question. Some of the uncertainty around immigration policy, is, in your assessment, is that making it harder for businesses and the Fed to plan going forward?
We hear anecdotal reports, but I don't see, there's nothing in the data yet on that, but you hear that kind of thing about construction, for example, and businesses that are dependent on immigrant labor are saying that it's suddenly gotten harder to get people. But I know you don't see that in the aggregate data yet, but yes, you hear it anecdotally.
Nick.
Thank you, Chair Powell. Nicholas Jasinski from Barron's. The uncertainty is certainly a theme today, and I'm wondering, are there any periods from your career or as it relates to markets, the economy, what's going on here in Washington and beyond, or from lessons from history that may provide some guidance for a central banker operating in uncertain times like today?
I guess I'd say this. Uncertainty is with us all the time. It is human nature, apparently, to underestimate how fat the tails are in a way. The possibility, we think of things in a normal distribution, and in the economy, it's not a normal distribution. The tails are very fat, meaning things can happen way out of your expectations. It's never not that way. I wouldn't, if you think about it, think about the first few months of the pandemic. That was uncertainty. Are we going to be able to reopen the economy? If so, when? How much of it? How long will it take? That was uncertainty. What we have now is a good labor market. We have the economy growing at 2 to 2.5%. Inflation's come down to now the headline inflation number was 2.6, and that's what the public experiences. We look at core because it's a better indicator of future inflation. So yes, the price level went up a lot for inflation, and people are feeling that, and they're not wrong. But so the kind of uncertainty we have is just a usual level of uncertainty about the economy, but then policies which are not for us to criticize or praise, really. Those are policies which people have been elected to implement. They're implementing them with a view to making a better economy. And so I wouldn't call this out as one of those times. I wouldn't compare it to the global financial crisis or anything like that, given that we have actually a very good economy right now.
Evan Reiser with Market News International. Chair Powell, is a March cut still on the table? And then additionally, are you looking to see better than expected data on inflation to cut? Or are you looking for inflation data that roughly aligns with current forecasts?
So as I mentioned, the economy's strong, the labor market's solid, downside risks to the labor market appear to have abated, and we think disinflation continues on a slow and sometimes bumpy path. that tells me, and the other members of the committee, the broad sense of the committee actually is that we don't need to be in a hurry to adjust our policy stance. Your second question was?
Whether or not you need to see better than expected inflation data or just inflation data that roughly aligns with your current forecasts.
You know, it's one of those things, we'll know it when we see it, but more the expectation is that we will make continued progress. And, you know, that's what we want. We'll know it when we see it. It's going to have to be something that isn't just idiosyncratic. You're going to want to see, you know, continued progress with housing services inflation. You're going to want to see inflation behaving in a way that builds confidence that we are really making progress. That's what it's going to be. And I mean, is that better than our expectations? We expect to see that. It's just a question of when.
Scott.
Hi, Chair Powell. Scott Horsley from NPR. In your 5-year review, you said the 2% inflation target won't be on the table. Can you talk a little bit about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's behind that?
I think that goal has served us well over a long period of time. It's also the sort of global standard. I think that if a central bank wanted to look at changing that, you wouldn't do it at a time when you're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it, if I'm being at all unclear. We're not going to change the inflation goal anytime soon.
And 5 years ago, if I can paraphrase what y'all decided, it was you're going to not raise interest rates preemptively to head off inflation until you see sort of the whites of the eyes of inflation, because the solid labor market was so beneficial. Have the last few years changed your thinking about that?
So what we really said was that we wouldn't look at a strong labor market and raise rates unless we saw some evidence of inflation. So the thought was that we'd seen really low levels of of unemployment with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any kind of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the starred variables, especially U-star, the natural rate of unemployment. So that was an insight. We'll discuss that again. That'll be one of the many things that we discuss. But I don't think that insight is wrong. We didn't, you know, we said, what we said was that, you know, at times when inflation persistently undershot 2%, we would likely allow inflation to run moderately above 2% for some time. That's what we said. That turned out not to be relevant to what actually happened. There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And, you know, our framework permitted us to act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision we looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But the framework was more irrelevant than anything else. That part of it was irrelevant. The rest of the framework worked just fine as we used it, as it supported what we did to bring inflation down.
Let's go to Mark for the last question.
Hello, Chairman Powell. Mark Hamrick with Bankrate. As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency. Could you talk about those risks now? And regarding individuals and households, perhaps distinct from the concern about the financial system, do you worry that speculation in this unregulated asset class could hurt their financial well-being, or do you think it has a place in a household's portfolio?
Okay, Elizabeth
Warren. Our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and you know, we think it's banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and sound. A good number of our banks that we regulate and supervise do that. The threshold has been a little higher for banks engaging in crypto activities, and that's because they're so new, and we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal just because of excess risk aversion, maybe related to regulation and supervision. So.
And with respect to households and their inclusion in the asset class?
That's kind of it's not really our bailiwick. You want people to be knowledgeable about the financial
what was that word?
Engagements that they have. And that's why we have, the securities laws that we have. It's why, if you read a mutual fund prospectus or individual stock prospectus, you want households to have the chance to understand the risk that they're taking. And, I do think it would be helpful if there were a greater regulatory apparatus around crypto, and I think that's something Congress was working on quite a lot. We've actually spent a lot of time, with members of Congress working together with them on various things, and I think that would be a very constructive thing for Congress to do. Thank you.
All right. Great music. Another long one. They usually ended around 3:10, 3:15. They've been running a little longer here, but as a whole, let's zoom out here. Go back to my screen here, Smay. I was on the 1 minute chart just showing you that that's a target. If this can hold and we break out and we want to see volume come in here to confirm the breakout, right? So if that volume doesn't come in, disregard this. But if you start to see increased volume, low end 104,500 from this formation, this falling channel should break us back up here. So we'll have to see how that one plays out. The longer time one that we were developing here is, we had really last couple of days been flat off here, rejecting really strong around 103, rising up in these ranks. If this ends up being a big play, I think I went back to this one. Let's go to this one right here. This ascending triangle, let's go right here, could send the price of Bitcoin we start to shoot to the upside. Okay, so I went a little high there. Let's go, boom, right there, 107,500, give or take. So some price tags to the upside if the bulls get a going. We did see massive volume come in here during the 2 o'clock, but look at this. I got a lot of stuff in here, so we got to start deleting some lines here, make this cleaner. A positive dovish meeting. So what we saw here. Want to make sure we're clear. There's still chaos. Again, I still expect to see a lot of this in the next 24 hours, right? But what I'm suspecting is based off of how that meeting went, and we're going to break this down note for note here in a second, I think the chaos is going to be more towards the upside. I think this is going to be a bullish meeting as a whole. We'll have to wait and see how this plays out again. There still is a lot that can happen. Volatile. Well, if we were to drop below 101, it wouldn't be the first time that we thought we ended with a very bullish meeting and all of a sudden things tanked still. But initial response, this was a bullish meeting. A couple other things that I watched, and I was watching out of the corner of my eye, kind of kept Bitcoin up there for the most part, but ONDO had a very special FOMC meeting. It's up 11% of the day from 2 o'clock, right? Or let's just go from the dip here. After that initial dip, with everything people thought was terrible, it's up 8% from that dip and still going to the upside there. Chainlink, there's a lot of people in chat discussing Chainlink. Chainlink had a nice little pump here during this whole thing. It was up 6% during that whole conversation. A lot of things were pumping there. Someone asked in chat, can we do more HBAR TA? Well, let's just start. How did HBAR perform during that, from that bottom pullback? It's up, 5.5%. So some good rallies from some coins. As a whole, though, we'll do way more technical analysis tomorrow on the live show. It's been a long show already. We started at 1:50. If you guys are still here, we have still 1,400 people over here on YouTube. Smash that like button. We're at 535 likes. Smash that like button. A new record here. We've never had more viewers on X live than we had on YouTube. 1,500, almost 1,600 people over on X. Thank you so much. Smash the like, hit the follow if you're not following me already over there on X. Tshroom, let's get into the details of some of the notes that we talked about beforehand. I want to start, I'm going to send it to you, kind of get your thoughts. So I told everybody there was 3 things that I was pretty certain were going to be brought up, and I wanted to hear his response. I wanted to hear his take on, is quantitative tightening over? It took us a while into the meeting to get there, but towards the end, we got the question about quantitative tightening. I wanted to hear his response to Trump tariffs. I want to hear his response to 2% inflation. There's a couple of things that laid out, but here's really what kind of happened. Nothing. Like, again, there was other statements that were bullish. It was overall bullish, but on the quantitative tightening question, again, happened late in the meeting, he gave a very political answer, but in other words said, we're going to keep our options open. We're not guaranteeing anything at the moment. But he did say, we feel very good about the economy. He said, I think in quote, the economy is in a great place, right? So that's a positive thing, but he's not ready. He's not ready to commit to the quantitative easing just yet. He wants to keep things open. But let's go ahead and take a look over here. What else did he talk about? Trump tariffs. All right. Trump tariffs. First of all, he made it very clear several times he did not want to talk about Trump. And it's no secret. I'm going to say this, and I'm going to give him some fairness. It's very clear he does not like Donald Trump. Okay. That is it's very clear, clean cut. Some of you I see in the comments even kind of saying like, hey, like, let's get him out of here. Here's the deal. I actually want to applaud him because despite the fact that he clearly is not a fan of the new president of the United States, he bites his tongue. The expressions we're getting that he doesn't like, he's actually not saying the words, I hate Trump. He's saying, I don't want to talk about it. It's the non-words. It's the way he expresses his body. It's the way his tone shifts. It's very clear he doesn't like him, but he's holding his tongue. He's doing his job. He's being political and appropriate by saying, oh my gosh, by the way, while I'm talking here, Bitcoin hit that first. Remember we talked about 104,400? Well, hit that first target. So there we go. That's some good TA on the shorter term. We were talking about way back down to the 1 minute chart. This falling channel, it hit our target. So back to what I was saying, though. I saw that in the corner of my eye. I had to bring that one up. He's being very political, but he refused to address Trump directly. He refused to address Trump policies. He said, that's not my job to give advice, or it's not my job to give advice or to critique or to celebrate the policy of the president, pretty much. And it's a level of saying, like, okay, I wish you would address it because I feel like you could very easily answer that question. What would tariffs mean for inflation? But I got to applaud his political nature of saying, you know what, it's clear I don't like this person, but I'm going to keep my tongue in my mouth on this one. I'm not going to go and say anything that's going to get me in trouble. So a nothing burger there. And then, of course, 2% inflation. You know, this was the big one. This is what we wanted to see. Is he going to change it? No, he's not going to change it. Effectively, it's still the target. But he understands, I think the way he answers these questions is that, like, while the long-term goal is 2%, he by no means is trying to get 2% by next month or the month after. He understands getting back to 2% is a long process. We're here to write it out, but he doesn't want to hurt the American people and the jobs in the process of chasing that 2% goal. So, you know, there's going to be people that dislike Powell. You know, I've said this for a long time. I'm not going to say I'll never critique him. He's done some things I don't like. I find it hard to say that he's doing a terrible job. I think the worst part of what he's done was the early days of 2022 when he held off raising interest rates when it was so clear that we were in trouble with inflation. But ever since he's gotten back on the path of saying, all right, we're going to take inflation seriously. We're going to take all the details seriously. Has he been political? Yes. Has he held his tongue and has he not been forthright with the American people at times? Yes. But what politician doesn't do that from time to time? The reality is I feel that he's actually made responsible decisions over the last year and some change. I think the way he's handled himself in these last couple of meetings, you can disagree with what he's saying, but I actually think that what he's doing right now is the right way to move forward. And even though he doesn't like Trump, there were nuggets in this meeting where he did say something along the lines of, I'm not going to go ahead and decide right now that all of Trump's policies are bad. we're going to pretty much have to see these policies be enacted. And then even once they're enacted, I can't make a decision. Let's actually watch what the data says after these policies come out. He's giving them a fair chance to be good. I mean, the majority of people on the left right now in the political spectrum are throwing in the towel saying, if tariffs happen, if Trump does this, if he does that, everything's going to fall. Everything's going to crash and burn. The whole world's going to die. Powell is saying, you know what? I'm not going to talk about what I think is going to happen because I'd actually rather see what happens and respond to it than try to be proactive and judge it too tightly. So I think some people gave him a hard rub on that one. I actually thought Jerome Powell handled the Trump stuff quite well, being as that it's clear he hates the man. Tshroom, those are some of my big takeaways here. Obviously, he mentioned crypto there at the end. He spoke positively about crypto. He didn't really say anything specifically. He's not going to get in crypto's way. He would love to see crypto be successful, but there's only so much he can do on the crypto matter to begin with. So those are my big takeaways. What about you? What were some things that stuck out to you about this meeting that people can walk away with?
Yeah, I see some people saying it was a nothing burger. I mean, in some sense it was, because there was no change. It wasn't a hike. It wasn't a cut. So there wasn't a whole lot of explanation of why he would have done one of those two things. But there was a lot of questions about the incoming Trump administration. I think he handled them with a very balanced hand and it deflected a lot, but also kind of made clear that it isn't necessarily obvious what tariffs would be, what effect they would have on the stock market, the economy, the bond market, inflation, and the labor markets. So I think he played that really well, but also gave some insight to folks who are interested in trading the tariffs, the incoming Trump tariffs, that, hey, you should not be trying to place trades quite yet. It's too early. There's too many moving parts. We don't know enough about who the tariffs are going to be on, what percentage, what products. Is it just going to be targeted to steel or oil in specific countries? So I think he set a good tone for the investment thesis on tariffs in general. And then when it comes to that 2% inflation rate target, he made very clear with the later question about it that they're not interested in amending that rate. That was the one that I'm most curious about. Didn't think he was going to say explicitly that he's going to amend the rate. But there was a question, I don't know who asked it, but it was the time was 3:07 when he answered the question, and he did say that the Fed is comfortable with an elevated inflation rate, but wants to return back to that 2% sustainably. And he used the term sustainably also in the very first opening remarks in referring to the 2% inflation. So it kind of shows, and I think this is why we're generally seeing markets up, at least in crypto. When it comes to the indexes, QQQ's barely green, SPX, the SPY is slightly red, NASDAQ, the Dow is actually slightly red. It's not selling off. I mean, you could make the argument that this pause was priced in, but overall, I think the market is taking this in stride because that was confirmed at this point in time. The Fed is comfortable not hitting its 2% target rate. Does that mean they're going to officially change it? No, I wouldn't have expected them to do that. That would have been quite surprising. But de facto, they are comfortable with an interest rate not at 2%, not at their target. And it's going to be interesting to see the next couple of decisions. One thing to point out is that in February there will be no decision. So it's March. They mentioned it. There was a question about it, but March is going to be the next decision from the FOMC. So my guess is that's starting to make more sense of when they may start cutting. But it depends. It just depends. If inflation continues to come down, then there starts to be a little bit more of an argument to go ahead and cut rates to kind of help the economy expand. So those were some of my key takeaways. If you want to jump over to my screen, Zero Hedge had a couple of things that he pointed out here. Stocks spiked on Powell's clarification when Powell said removal of inflation line is just a cleanup to shorten a sentence, not determination that inflation is rising again. So that's good. That's generally positive. There were a couple other things that he pointed out here. We don't care about Reddit. Powell said, I would say we're meaningfully above neutral rate. Most recent data suggests reserves are still abundant, and asset prices are elevated by many metrics right now. Powell said banks are perfectly able to serve crypto customers. And so that's the one, obviously, that we're most interested here at Investing Bros, because we're long a lot of cryptos, a lot of altcoins, as well as Bitcoin and Bitcoin correlated stocks and ETFs. So, to hear Jerome Powell say anything but stay away from crypto and banks shouldn't be involved in crypto, and to kind of tiptoe his rhetoric into crypto is okay, and households, might consider holding crypto. It's not completely a death trap when it comes to risk. That's very bullish. And we saw Bitcoin respond positively to that. We got up to 104,000 per Bitcoin on those words. So, those are some of the things that stuck out to me. I'd say overall, it kind of had the appearance of a nothing burger speech, but I think what it really did when it comes to that 2% interest rate, 2% inflation rate relationship that the FOMC has, it really kind of showed that they're willing to kind of ignore it for a season and allow potentially another couple of cuts this year, even if inflation doesn't come back down to that target 2%. That's bullish. That's what you want to see if you're holding risk assets. And so those were kind of some of the things that stuck out to me.
Absolutely. No, I mean, as a whole, I think they've been some nothing burgers of these meetings as of late. They're always important because you never know what's going to be said. But I think we have a winner. I think we have a very good FOMC meeting that is already seeing some big breakouts happen. We're going to wrap up here. Let's look at the charts one last time. We'll call it a day here in just a second. But Bitcoin, we were on the 1 minute chart a lot during the show, right? And we talked about the falling channel. We broke out. We already hit the target from that breakout. Wouldn't be surprised to see us pull back down. We're probably overextended. As you move out to, like, let's say the 1 hour chart, okay? What we talked about earlier in the show is this pattern right here, as we had higher lows coming in for the last couple of days, and we seem to have found, even though there's a couple wicks that broke through, a lot of rejection happening in the world of 103,000. Well, this is an ascending triangle pattern. This is a pattern watch out for over the next couple of hours, next day or two. We have a breakout projection for roughly 107,460. So 107,500, right? That's going to be a target to absolutely keep an eye on. It's going to be kind of back on par with some of these peaks we had back here earlier in January. Now, there's another thing to be mindful of, though, right now, as you are looking at the 1 hour chart, and we have wicked now above. The 4 hour chart is wicking above this red line. I want to be clear here. Let's not jump to any conclusions just yet. We absolutely need to start seeing multiple candles break above. We need to see higher volume coming on the breakout. But if we sustain this move, that would go ahead and put a very good sign on the fact that this pullback January 26th to 98,000 was the bottom of this pullback. It starts a whole brand new move up towards 115,000, a level we have been talking about for a while. This breakout of this channel would send us all the way to 114. It's not going to happen overnight, not going to happen just like this, but it's something to watch as we are breaking out of. We got a great FOMC meeting. We're breaking resistance levels. We're breaking price levels we haven't seen since the 26th. Like, again, that doesn't seem like that long ago, but it feels like a long time ago. It's not that long ago. But my overall take here, my overall thought is that we're breaking resistance levels. The bulls are waking up. They're coming alive right as we end January. This is something we had been talking about as well. It's a significant Fibonacci extension level. Go back to my chart here one more time. A lot of things piling up here. The 1.272 area, 115, that is very significant Fibonacci level, very significant breakout of this formation. I think it's the same area, give or take, as this channel that we broke out of. We've now turned resistance to support, but same thing over here. Take a look at this. This breakout pattern has us somewhere in that same camp of 114, 115. So do not be surprised if we have the next level to watch for a sell-off, a major sell-off, and maybe we correct, like when I say major, 5-10%, but a big pullback might just be that 115, 114 area. So keep an eye on that. We'll be back tomorrow, not the same time, but we will be in the same place, 3 p.m. live show. Also, earlier I heard people talking about Solana. Make sure if you haven't done so already, over on our YouTube channel this morning, a brand new Solana price prediction went out. Show my screen here, Smay. Go check out the channel. This is the thumbnail for it. We talk about, could Solana make it to $2,000 in the bull market? We give you several different targets, several explanations as to why and what Solana could do in this bull market. Go check it out. Go leave a like over there. Make sure, though, before you leave this video, you smash the like and hit subscribe so you don't miss any of our content going forward. With that said, though, thank you for joining us for the FOMC day. This does wrap up the video. We'll see you tomorrow. Adios.